Welcome to the third and final video in the Role of the Board Treasurer video series. My name is Kelly. I'm with the Community Development Unit of the Government of Alberta. The goal of this video series is to introduce the role of the Treasurer on a nonprofit board. In it, we will explore the responsibilities of the Board Treasurer, the various ways that they help their boards, how they perform their duties in small and large nonprofit organizations, and how they can best perform in their role as treasurers. Some of you may not be board members, and that's fine, but we do want you to be aware that the information and concepts presented in this video series are from a board member perspective and are at an introductory level. This video focuses on the information you need to know if you are a first-time nonprofit board treasurer or are looking for a refresher on the subject. Please note that the information presented in these video recordings and the related materials are not intended to constitute legal advice, the rendering of legal concepts, consulting, or other professional services of any kind. We simply want to share with you information that we think will be helpful as you navigate your organization through its operations. We are not lawyers, chartered accountants, or other kinds of financial professionals. So for your own organization's specific situations or questions related to the material that we present, you may need to seek the advice from a professional in the related area. We also have a toolkit with links to other resources related to the role of board treasurer that you may find helpful. We developed a glossary that you can refer to during the videos, and the glossary and toolkit are both in the description of the YouTube videos, as well as the online courses on the Alberta Nonprofit Learning Centre. By the end of this part of the Role of the Board Treasurer video series, you will be able to explain the treasurer's role in financial strategy and risk management of the organization, identify how the treasurer serves as a member of the board's executive team, and describe how to support the board treasurer in performing their role. So let's get started. In videos 1 and 2, we talked about the first two main functions of the treasurer. That is, 1, to manage and or oversee the organization's financial transactions, and 2, ensure that proper financial procedures and financial reporting are carried out. In this final video, we're going to move on and look at the treasurer's role when it comes to advising the board on financial strategy and risk and what that means. We'll also look at the role of the treasurer to serve on the nonprofit board executive team and ways to support the treasurer in your nonprofit. Advising the board on financial strategy and risk includes 3 main subcategories, which are prepare an annual financial budget, advise the board on risk management, advise the board on fundraising. Let's look at each of these in detail. We start by the treasurer's role in preparing an annual budget. In a small volunteer-run nonprofit, the treasurer may be responsible for actually preparing the budget. But in a larger organization that has paid staff, the treasurer's role may be to facilitate the preparation of an annual budget by others. In either case, the treasurer is the board's point person on budget preparation and on all other budget-related matters. A budget is a roadmap that shows in numbers what a nonprofit organization plans to do and how it plans to get there. It's a key tool for getting everyone to agree on what your group will do in the coming year. The budget drives decision-making and is an important part of an organization's success in carrying out its mission. The budget should be based on a strategic plan that is approved by the board. The treasurer will ideally work with the board on the plan to develop strategy and help set financial goals. The budget should be reviewed and approved by the board. However, the treasurer should be prepared to explain and justify the document. The treasurer also needs to stay on top of the budget all year long and to regularly monitor and compare the actual revenues and expenses incurred against the budget. If there are any unexpected budget variances during the year, whether negative or positive, and/or cash flow shortages, the treasurer needs to be aware of this and may need to advise the board on options. The treasurer will often advise the board on fundraising. The treasurer is often part of committees or teams that are seeking grants, developing proposals, looking for sponsorships, and/or are responsible for making recommendations regarding a nonprofit's investments. For example, if the organization's grant writer is developing a grant application, they may need to consult with the treasurer when they are completing the budget for the grant application. The treasurer also needs to understand the legal parameters of the nonprofit and what is possible in terms of fundraising. For example, if the nonprofit has registered charity status through the Canada Revenue Agency, or CRA, then the treasurer needs to understand the CRA rules and regulations related to fundraising. When the treasurer participates in the strategic planning of the organization, they can also help the board think strategically about the organization's financial viability and sustainability by encouraging conversations and questions. Some questions that the treasurer can ask include, does our organization have the right funding model? A well-thought-out approach to raising revenue is essential to sustaining your programs and increasing their impact. Are the funding activities that we are undertaking the most efficient and effective? Are we tracking the right financial key performance indicators? In other words, are we tracking the right metrics? Does the organization have a diverse funding base, or is it reliant on just one main source of revenue? This is basically revenue streams diversification. Do we have appropriate financial reserves in place in case something goes wrong? Okay, let's move on now to the treasurer's role to advise the board on financial risk management. Sound financial decisions and financial risk management practice protect critical assets and allow nonprofits to deliver the services and programs that are at the core of their mission. Taking a close look at the financial risks that a nonprofit may face is a key way to ensure stability and the long-term sustainability of the organization. As part of their role to advise the board on financial strategy, the treasurer should make sure the board is also carrying out its fiduciary duty related to financial risk management. There are three primary goals of nonprofit financial risk management. One is preventing the loss of financial assets. The second is reducing the cost of those losses. And the last one is reducing the impact of those losses on your clients or beneficiaries. Nonprofits face a number of major and minor financial risks. Here are some of the most common ones. The first one is fraud. Financial fraud committed by employees or volunteers within an organization is a risk for nonprofits. Mismanagement of funds is another one. This can have serious consequences for the nonprofit, even if they are not explicitly fraudulent. Depending on your context, misuse could include things like overspending on gala fundraising events or on staff or volunteer travel. It is important to review expenditures from the perspective of how they may appear to the nonprofit's clients, donors, funders, the general public, and other stakeholders. Loss of physical assets is another one. This can be things like theft or destruction of major assets like office equipment, computers, or building infrastructure, and they can be expensive. Also, lack of controls on assets or inventory may result in significant losses through negligence. Another one is tax liabilities. Although Canadian nonprofits are typically tax exempt, they still may have to file an information return or other types of forms to the CRA and are responsible for employee payroll taxes, for example. If you don't submit a required tax filing or payroll taxes, you may jeopardize your nonprofit standing with the Canada Revenue Agency and have to pay fines. And the last one we talk about is poor investments. Organizations that are fortunate enough to have financial reserves may choose to invest them. Poor investments that fail to deliver the expected returns or erode the principal can be a risk. Also, nonprofits and charities need to ensure that any investments are in line with their mission and values to keep their reputation. For example, in Britain in 2013, the nonprofit Comic Relief received negative media coverage over its investment in military weapons and tobacco shares. Now, how can the Treasurer help with these risks? The Treasurer can help the board think about financial risks and what steps can be taken to reduce them. One of the ways the Treasurer can do this is to ask board members some or all of the following questions. The first question is, what are the primary financial risks that the organization faces and how can they be reduced? This could involve the board doing an assessment of the organization's primary financial risks and developing a risk management plan to reduce them. The next one is, does the organization have appropriate financial systems in place for managing financial transactions, bookkeeping and accounting, budgeting and financial reporting, and financial governance, for example, policies and internal controls? The board doesn't have to develop these financial systems itself. It can delegate the work to others, but it is the board's role to ensure the financial systems are in place. Another question could be, are there appropriately skilled financial people and structures in place? Depending on the size and structure of your organization, this may look quite different from organization to organization. For example, if you are a small nonprofit with no paid staff, the Treasurer may be carrying out a lot of the financial administration and the weekly or monthly transactions themselves. However, boards should be mindful of not overburdening their treasurers because burnout can be a risk for this role. Smaller nonprofits may want to focus on financial functions and delegate some of these to others. For example, setting up a finance committee to assist the Treasurer with some of the financial functions and/or hiring a part-time bookkeeper can be very helpful. If you are a larger organization with paid staff, the board wants to ensure that the people who are hired to staff the financial positions, such as bookkeeper, accountant, controller, chief financial officer, etc., are appropriately qualified and have access to training. The board will also want to make sure there is adequate training for the Treasurer and members of the Finance Committee. And also very important, is there a succession plan in place for all positions? And one other question, are there proper financial internal controls? The board needs to ensure that the organization employs several safeguards to ensure that financial transactions are properly authorized, appropriated, and allocated, executed, and recorded. Again, the board does not have to develop these internal controls itself, but it must ensure they are in place. Now this brings us to the fourth and final main function or duty of the Treasurer, and that is to serve as a member of the board executive team. The board chair, vice chair, treasurer, and secretary are often part of the executive committee of the board, or as it is sometimes called, the executive team. A key role of the executive team is to plan board meetings and ensure they go well. All of the key functions that the treasurer does for the board should also be carried out for the executive team. This includes the treasurer sharing updated financial documents and information with the executive team. This will help them plan the next board meeting and ensure there is a strong agenda that will facilitate better discussions at the board meeting. For example, maybe a rental agreement is ending and needs renewal. When the treasurer gives this information to the executive team, they can include it in the agenda and have a discussion about the renewal at the board meeting. Along with the rest of the executive team, the treasurer also has a responsibility to ensure board meetings go well. The treasurer is expected to participate equally in meetings, just like other board members. The board treasurer is also a board member, so the treasurer's own views and perspectives need to be heard on all matters, not just on the financial ones. So the treasurer should participate in all discussions and decision-making, no matter the topic, just like all other board members. As treasurer, you represent the membership who elected you to the board and therefore need to ensure those voices are heard as part of all board discussions and decisions. Finally, being a board treasurer means representing the board to the community, including being proud to be part of the board and the organization. Certainly, you want to represent the board and the organization in a positive way. Okay, now we have covered all four main functions or duties of the board treasurer, and we can see that the treasurer is very often fulfilling multiple roles within the organization. This can cause confusion and potential conflict between roles. Let's look a little deeper at this issue. A primary function of the board is to oversee rather than manage the organization. This is because the board can choose to delegate the management function to others, but not its oversight or governance role. The ability to provide objective oversight may be diminished or weakened when the treasurer's role involves numerous management-level responsibilities because, as a member of the board, that individual will then also have to oversee their own work. Treasurers should be aware of the different roles they are required to play and whether they are management or oversight functions. Boards and directors should be aware that when financial roles are combined, a level of oversight and review is generally removed. During this video series, we identified a number of roles and functions of the treasurer. However, ultimately, it is up to your board to decide how many of these roles and functions are actually carried out by the treasurer or by others. These financial roles and functions are always there, but how and by whom they are carried out is largely determined by context. In other words, by the size, scope, complexity, etc. of the organization. For example, in a large organization, this could mean that the treasurer's role is only in an oversight capacity because there are paid staff to carry out the actual day-to-day financial management functions. On the other hand, in a small organization that is entirely volunteer-run, the treasurer will have those same oversight responsibilities, but they may also be carrying out the actual day-to-day financial functions or transactions themselves. So this scenario would place the treasurer in a position where they are carrying out management-type responsibilities while also providing oversight of their own work. The more engaged the treasurer becomes in management functions, the more their ability to exercise independent oversight will be diminished. Therefore, before the treasurer and board approve the treasurer's job description, it is a good idea to first consider whether there are others who could fulfill some of the roles. Also, it is important to ensure that the roles are clearly defined in written policy, job descriptions, and other governance documentation. Now, as we've seen throughout this series, the role of the treasurer is an important and busy position that may seem quite daunting. Furthermore, a not uncommon scenario is that the true picture of the financial management of the organization is only revealed once a new treasurer starts. For example, how many times have you heard after you've started as a new treasurer, "Oh, by the way, we don't have a bookkeeper and the executive director doesn't have a financial management background. We don't have a finance or audit committee, and well, the board isn't very financially sophisticated," or things like that. This is often how the treasurers find themselves taking on all of the financial roles within the organization. And not surprisingly, it's not unusual for treasurers to burn out or for nonprofits to have difficulty recruiting people to take on the role. So now let's look at some ways to make the treasurer position more appealing so that your organization can retain the awesome treasurer you hopefully already have, and you are also able to recruit a strong candidate as a successor when the time comes. Some suggestions include, firstly, don't overwhelm the treasurer with too many jobs. Hire a bookkeeper, either part-time or full-time. Spread the financial work and responsibilities around by sharing it among other board or staff members. Do not make the treasurer do absolutely everything. Create finance and audit committees. Don't give the treasurer work that is too simple or too complex. In other words, be willing to hire outside professional expertise when it is required. The second thing you could do is ensure that board members are engaged in the financial governance of the organization. Remember what we discussed in video 1. The board must be satisfied that the organization's financial information is in order. This includes ensuring that proper accounting structures and processes are in place and that financial reporting is completed. Individual board members must also understand these structures, processes, and financial reporting. The third thing the board could do is have good financial policies to provide a consistent decision-making framework with regard to financial matters, including transactions, reporting, etc., to help guide the treasurer and others with financial management responsibilities within your organization. Also, make sure there is a plan and process to mentor your next treasurer, i.e. the successor. And last but not least, provide learning opportunities for the person who is serving in the role as treasurer. Helping them to further develop the skills they need to fulfill their role as treasurer within your organization is a great benefit to them as individuals and to the organization as a whole. As we have seen, the treasurer has a large and important role to play within a nonprofit, but you may have a finance committee in your organization as well. So let's take a look at the role of a finance committee and what it does. And then we'll discuss how it can be a useful structure to help the treasurer and the overall organization. There are a number of benefits to having a finance committee to help the treasurer perform their duties. There are significant risks if all financial tasks are performed by one person without supervision from others. So having a finance committee will help to prevent fraud. It spreads the burden of financial management around and therefore potentially improves its quality. It can also help avoid treasurer burnout. It frees up time at board meetings because detailed financial discussions can happen in the finance committee. It enables more democratic control of the organization's finances. It helps train new board members in financial matters by serving on the finance committee, and it provides for continuity when the treasurer resigns or their term of office ends. For these reasons, it is good for both small and large organizations to help the treasurer and set up a finance committee to share the workload of the nonprofit's finances. Typically, the treasurer chairs the finance committee, and the committee provides an opportunity for good discussions of financial matters with regular reporting to the board. The board may even delegate the authority for some financial decision-making to the committee. But remember, the board as a whole must remain accountable and engaged in financial matters. Now, one thing that you may all be thinking about is where can we recruit or look for a treasurer? If you're looking to recruit a treasurer for your board, here are some suggestions of where to look. The first one is to advertise the position. Some capacity building organizations such as Charity Village and others post volunteer board positions on their websites. You can also develop a succession plan. Succession planning that includes strategies on how to recruit a new treasurer can be very effective. For example, you can recruit your next treasurer from the finance committee of your organization and ask the current treasurer to mentor them. Or if you recruit someone from outside your organization, plan to have a few months of overlap between the current treasurer and the new one so that that person can be trained. Another way is to tap into your board and staff networks. Make sure that there is an accurate job description for the treasurer role and talk up the position with your current board members and staff and ask them to tap into their networks. One other way is to inquire at accounting firms. Talk to the accounting firms and accountants that you may know from the past or accountants that other nonprofits you know recommend. Many professionals are looking for meaningful volunteer opportunities. And one last suggestion we have is contact business faculties at universities and colleges. Business faculties can be a great source for financial professionals such as accountants and bookkeepers in training. Contact their administrators, and they may know of students who would be interested in getting work experience by volunteering, or they may be able to advertise your position to their students. This brings us to the end of the third and final video in the Role of the Board Treasurer video series. Thank you for watching. Our contact information is on the slide and in the toolkit as well. If you are in Alberta and have a question, need further information, or would like to request our services, you can contact us by email or phone. You can also access our website to know more about our resources and services. Lastly, if you want to be notified of our future services and resources, you can add your email address to our subscription form and you will receive updates as they become available. The link to the subscription form is in the description of the video as well. Thank you for your attention. Take care, and always remember that our communities have so much more because of everything you do. Thank you, and bye for now.